Hello, everyone. Today we're going to break down the American market, take a look at a few instruments, and highlight the key points that I hope will help you make your trading decisions. Let's get started, and we'll start with Palantir. On the monthly chart, the trends and levels remain relevant. The price continues to move within the upward trend and is currently at its lower boundary. At the same time, the lower boundary coincides with a retest of the previous effort, which also supports the idea of a renewed upward movement. As for the volume, I'd note that there are basically no sales at the moment, and most likely none are expected. That's why, in my opinion, this asset is among the promising ones if we're choosing which asset to invest in the near future. Now let's take a look at the daily chart. Since the last review, almost nothing has changed. The price continues to be squeezed from both sides. On one hand, the support is preventing the price from dropping, and on the other hand, there's the upper boundary of the channel. I'm sticking to my previous chart expectations, and I want to point out that lately buy-in has been prevailing. That's why I consider a breakout to the upside from the descending channel to be the most likely scenario. But for that to happen, we need to wait for confirmation in the form of a surge in buying and enough momentum to break through the wall of selling and head toward the $200 per share level. So for those holding shares in their portfolio, everything is still in your favor for now. I don't see any reason to sell them. We'll be waiting for growth to resume. For those thinking about adding shares to their portfolio, I'll repeat, wait for the price to break out of the so-called triangle. Next up are Oracle shares and their monthly chart. The price continues to move in an uptrend and has reached a significant level. That's market. If the price manages to break through it, I'll expect further movement toward the upper boundary of the ascending channel. Recently, buy-in has dominated in terms of volume, but so far it hasn't been able to overshadow previous selling. But you can see they're trying. Now, looking at the daily chart, the price continues to move within the uptrend, and similar to Palantir, it's being squeezed into a triangle, with the lower boundary of the channel holding from below and the $200 level acting as resistance from above. I think the situation will be resolved soon. And just like last time, I believe the more likely scenario is that the asset will rise, targeting $240. But whether that's how it'll play out, only time will tell. I'm sticking to my chart-based expectations. So, for those holding shares in their portfolio, I don't see anything critical at the moment. The X point for selling the asset would be a strong drop in price below the $180 level. If that happens, you'll need to wait for new opportunities to enter a position. I think it only makes sense to buy this stock after the price breaks out and holds above $200. Next up are Intel shares. There's not much to say about the monthly chart. There was a strong price surge, and as I mentioned earlier, we should expect a correction of the entire move, which will most likely bring us to the highlighted level. It'll be interesting to see how things develop in the future. Now let's take a look at the daily chart. In the previous review, I anticipated the start of a correction, and as we can see, everything is going according to plan so far. But considering the previous price surge and the fact that we can't know what the future holds, I think it's right to point out another possible scenario, which is the idea of the upward movement continuing. In my opinion, this is unlikely, but it's still a possible scenario for the price to keep moving up. Why is it unlikely? Because at the moment, I don't see any concrete efforts from buyers, but they might become more active after a small correction. So, for those who are holding stocks in their portfolio, I can't say anything positive for you right now. At best, the price will return to its previous high. But whether it will continue to grow is a big question. In my opinion, the asset will remain in a correction phase for some time until it reaches the indicated lower level. Next, Microsoft shares. On the monthly chart, the trends and levels remain relevant. The price continues to move in an upward trend and has bounced off the lower boundary of the channel, which could indicate further price growth. But when it comes to volume, things aren't so clear-cut. There are some purchases, but for now, they're not strong enough to continue the upward movement. Despite this, I believe the target of $450 per share is achievable. Let's take a look at the daily chart. In the previous review, I expected a deeper correction, after which I anticipated a resumption of growth, but so far that hasn't happened. Theoretically, we could already identify an emerging upward trend, but then that would contradict my statement. And looking at the volumes, I'll stick to my original chart expectations. Let's mark the local upper level. I think this will be the key level. If the price breaks through it in the near future, then we can no longer expect such a correction, and we'll instead watch the price continue to move upward, with the first target at $450 per share, and possibly seeing the price reach $475 per share. So, for those who hold shares in their portfolio, the overall trend is upward. But I don't rule out the possibility that the price could still drop below the $400 level before continuing its upward movement. I think it only makes sense to buy more shares at the $400 level, or if the price consolidates above the